Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing enterprise product stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 62 billion market cap. They're trading at $28 a share, and they have 2.2 billion shares outstanding. Enterprise Products is a midstream natural gas and crude oil pipeline company. They have over 50,000 miles of pipeline. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Free cash flow was really low in 2020 due to low revenue from COVID. It went up 140% into 2021, 6.3 billion, dropping a little in 2022 to 6.1 billion, then down 29% to 4.3 billion in 2023, which is a little less than their dividend. They pay a 7.27% dividend yield, which costs them $4.5 billion a year in dividend payments. So they need to either raise their free cash flow or lower their dividend. Else, they're going to need to fund their dividend with debt. Net income is the profit or loss on the income statement. It's revenue minus expenses, and that goes up each year from 3.9 billion to 5.7 billion. Their margins are in the low double digits, between 10 and 14%. Net profit margin is net income divided by revenue. It's a percent of the revenue you convert to net income. Revenue is the sales for the company, and that peaked in 2022, close to 60 billion. It dropped 15% into 2023. Pretty much all midstream stocks peaked in 2022, dropped in 2023, because their revenue and profits move with the price of oil. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 89 billion. We discounted those numbers back to today's new weighted average cost of capital. We get a value of the company of $84 billion. We divide that by 2.2 billion shares. And we get a calculated stock price of $39. They're trading at $28. They're trading at a 27% discount. It's a pretty strong buy according to the model. There are 48 companies in the same industry as EPD, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend 3.3 billion in capex, a lot higher than the median average. They have a good debt to equity ratio 1, which is much better than the average. That means for every dollar of equity, they have $1 of debt. They pay a really high dividend, 7.3%. Frontline pays the highest, close to 9%. They generate 4.3 billion of free cash flow, which looks pretty good. A good amount lower than ET, also lower than MPLX, which is much smaller than EPD. They're trading at a little over 2 times book value. Plains has the best at 1.2. They have a really good PE, trading at 11 times earnings. That means their market cap is 11 times their earnings. Earnings is the bottom of the income statement. It's revenue minus expenses. They're trading at 14 times free cash flow. A lot worse than Enbridge and ET, a little better than Williams. Look at Scorpio, 4 times free cash flow. Maybe I should do a video on them. They're trading at 1.2 times revenue, which means their market cap is 120% of their revenue. Their 5-year annual revenue growth rate is pretty close to the median. If you put $10,000 into this company 10 years ago, you'd have $15,000 today. The stock price moves with the price of oil. At the end of 2015, oil crashed. Same thing in April 2020, oil crashed. So the stock price came way down. So if you picked it up during the crash, you could be up 200-300%. This dark red line is the price of oil. You can see in April 2020, oil came down a lot, then it rebounded. So did all these midstream stocks. Enterprise is the green line. That's up about 1% in the past 5 years. Last week, they released their first quarter earnings, so let's go through the results. This is their income statement. Revenue 15 billion, that's up from 12.5 billion. Here's a breakdown of the 15 billion. 5.1 billion from NGL pipelines and services. That's natural gas liquids. Most of it is from the sale of natural gas liquids, 4.4 billion, but they also make money from processing, transportation, and storage. 740 million from those 3. Those are the midstream services. That's what midstream companies do. They store and transport energy. The way it works is natural gas liquids are removed from the natural gas. Natural gas liquids can be used in a lot of different things: plastics, fuel, heating, etc. $5.4 billion of their revenue is crude oil pipelines and services. $5.1 billion from the sale of crude oil, and then the midstream part, transportation and storage, $300 million. Then natural gas pipelines and services, $500 million from the sale of natural gas, $350 million from transportation. Natural gas produces less harmful emissions than regular gasoline. A majority of natural gas is transported via pipeline. Then the last segment is petrochemical and refined products, $3.4 billion. $3 billion from the sale of petrochemical and refined products, $386 million from the midstream part, $126 million from fractionation and isomerization. Fractionation is a separation process. Isomerization is a chemical process when one molecule is transformed into another molecule, but they both have to have the same atoms. And then the atoms are rearranged. Instead of ABC, it could be CBA or CAB. $178 million of transportation, $82 million of storage and terminals. Their revenue went up in each segment except for natural gas pipelines. That went down a lot, about 40%. But petrochemicals went up a lot, up about 50%. Let's go back to the income statement. Operating expenses $13 billion, higher than last year of $11 billion. Operating income $1.8 billion, up a little from $1.7 billion. They pay $330 million of interest on their debt. They receive $13 million of interest on their investments, $21 million of taxes. MLPs tend to pay low taxes, like REITs. Net income $1.5 billion. Earnings per unit, EPU, 66 cents, up from 63 cents. Their shares outstanding are pretty flat from last year. 2.2 billion, still around the same number, a little less, but not much. Let's look at the balance sheet. Current assets $12 billion, current liabilities $13 billion, so their current ratio is a little below 1. They have $7.6 billion of accounts receivables. This is how much money they sold on credit. $3.3 billion of inventory. Of the $3.3 billion, $2.2 billion is NGL, natural gas liquids, $345 million petrochemicals and refined products, $750 million of crude oil, only $3 million of natural gas. The biggest asset is PP&E, property, plant, and equipment, $46 billion. They give a breakdown of the $46 billion, $59 billion from plants, pipelines, and facilities, $4.5 billion from underground and other storage facilities, $900 million of marine vessels. They also transport oil by vessel. Construction in progress, $2.2 billion. So the gross value is $67 billion. They depreciated $21 billion. So the book value is $46 billion. They have $5.6 billion of goodwill. Goodwill is the premium you pay when you acquire another company. Here's a breakdown of the $5.6 billion. $2.8 billion is acquisitions of NGL pipeline and service companies, $1.8 billion crude oil pipeline and service companies, and $1 billion of petrochemical and refined products companies. Their total assets $71 billion, similar to last year. Their biggest liability is long-term debt, $28 billion. They give a breakdown of the $28 billion. You can see there's lots of notes. There's no debt due this year, $1.2 billion due next year, and about $1.6 billion due in 2026. And you can see each year they have a good amount of debt due, going out to 2060. Assets minus liabilities equals equity. They have $28 billion of equity. They raised $29 billion from selling common units. They bought back $1.3 billion of their own stock. MLPs don't have retained earnings listed. Let's look at a statement of cash flows. The first section is operating cash flow. They generated $2.1 billion this quarter. In the first quarter of 2023, $1.6 billion. And the way you calculate operating cash flow, you start with your net income, $1.5 billion. Then you add back the non-cash items on the income statement. The biggest one is depreciation, $500 million. In the investing section, it's mostly CapEx, a little over $1 billion. If they used cash for acquisitions, it would be on here. In the financing section, it shows how much debt they added, $14 billion, how much debt they paid back, $13 billion. The dividends they paid to their unit holders, $1.1 billion. Any stock buybacks, $40 million. So in their financing section, that a cash outflow of $1 billion, last year $876 million. Cash in the beginning of the period, $320 million. And they added $64 million because cash at the end of the period is $384 million. You see net cash for the quarter, $64 million. To calculate the $64 million, you just sum up operating cash flow, the $2.1 billion, minus the $1 billion in investing, minus the $1 billion of financing. That's how you get $64 million. And this $320 million and $384 million you can find on the balance sheet. Cash at the beginning of the period, $320 million, 180 plus 140. Cash at the end of the accounting period, $384 million. That's a sum of cash and restricted cash. Let's take a look at the company on Simply Wall Street. Its last price, $29.63 billion market cap, up 2.5% in the past week, up 11% in the past year. Let's see what they say about the company. Enterprise provides midstream energy services to producers and consumers of natural gas liquids, crude oil, petrochemicals, and refined products. It has 4 segments: NGL pipelines and services, crude oil pipelines and services, natural gas pipelines and services, and petrochemical and refined products and services. They were founded in 1968, headquartered in Houston, Texas. Here's their stock price since 98. Their lowest stock price was in 98, and then it looks like it had a nice run up to 2007 at about 16. Then in 2009, it dropped below $10. It reached its peak in 2014. There was a crash of oil in 2015, so the stock came down. It traded sideways up to 2020, then came down a lot in April 2020 when oil prices became negative. It would have been an amazing time to pick up the stock. You could have got it for as low as $12. It's up about 150% since then, trading in the high 20s. Their revenue forecast for 2024 is $56 billion, 2025 $58 billion, 2026 $60 billion. Their free cash flow forecast for 2024 is $4.8 billion, 2025 $5.2 billion, 2026 $6.9 billion. Pretty aggressive growth into 2026. Their revenue was pretty high in 2014, over $50 billion. Then it was cut in half in 2016 at $23 billion. Then it came up, back down. Their revenue more than doubled from 2020 to 2022. It's come down a little since then, currently at $52 billion. This red line is their debt, and the blue line is their equity, which are really similar year to year. Right now, they're almost identical. This green line is their cash, which is very low, only $180 million of cash. A low yield in 2014, under 4%, over 10% in April 2020 when the stock price came down, and the forecast is 8.1% for 2026. That's a really high yield. The CEO's salary went from $800,000 to $1.2 million. Total compensation $14 million. Tenure as CEO 4.3 years. In the past year, there's been some insider buying, no selling. 41% of the company is owned by the general public, 32% by private companies, 25% by institutions, and 2% by insiders. This company is their own biggest shareholder, 31%. Then Alps, her father, Dan Duncan, was the co-founder of this company. Dan's 3 kids are billionaires because they each have a piece of this company. And the ticker trades on the New York Stock Exchange, London Stock Exchange, Mexican Bolsa, and Sao Paulo Bolsa. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking the link in the description below. Thanks for watching.